Welcome, everybody, to the Chinchilla Pickin' Podcasts. As always, we hope to be entertaining, educational, and uplifting because we want everyone to make money. It is March the 31st, 2023 at 6:20 p.m. I am David Underwood, and as always, I am joined by the one, the only, Brendan Beaver.
How's it going?
It's going well, man. I'm pumped up, and I think I'm pumped up because I had a big, giant coffee, and then I went to my workout and did my workout, and then I came here and got prepared for this podcast. So now I'm just like, my whole body's just jazzed, if you will. I don't know. Is that the right term? Who knows? I don't know anymore.
That sounds right.
Right? Yeah. So I had a nice veggie sub, homemade veggie sub, cut up some vegetables. I had some cheese. I did add some cheese in there and ate that for dinner. So I don't know why I'm talking about my dinner on a stock and financial podcast, but that's what's going on. It's opening day around the nation. Yesterday, a lot of teams played baseball for the first time. Baseball's taken off. Are we going to see, maybe like, FanDuel and some of these other DraftKings to make a play in the baseball and see if they can make weird bets like, will this pitcher throw his first strike in the first or second inning? Bet $50. I mean, it's ridiculous to some of these bets that I'm hearing about. I don't gamble, first of all, in sports at all. And it's other people telling me what they're betting on. They're like, yeah, we're betting on whether or not the pitcher throws his arm out or leaves the game in the seventh inning or sixth. I'm like, this is ridiculous. You guys actually wager money on this.
Well, you could bet on whether the pitcher is going to leave the sixth or seventh inning because you could just basically look and see what the pitcher usually does. How long it usually takes him to get out of the inning, or if he's good, if he's a good pitcher, he might go 7 or 8 innings. If he's a bad one, he might go 4.
Right. There's different things there. So,
but they won't make as much money for baseball.
No, I think football season is the big season for the sports books.
It's football, and then March Madness, and then now you got the NBA playoffs coming up. That might be a little boon for them, but it's going to be a dead season after that.
Talk about March Madness. One last piece of fluff, and then we'll get into it. I do want to have a big shout out to the San Diego State Aztecs. I tip this is the only sport I cheer for the Aztecs. Well, not the only sport I cheer for the Aztecs in, but I was very happy to see them in basketball do well. I had met Steve Fisher back in the day, and I knew a lot of the Aztec players. And this is a long time ago, guys. This is still letting you know my age here. Back in the day, and it was a lot of fun knowing them and hanging out with all those basketball players back then. So I still root for the basketball team. Very happy to see them in the first Final Four. Go Aztecs! Hopefully they have a good run here and they can win the whole thing. That would be awesome.
Why did they pick that name for San Diego?
If you don't know, California was originally mainly Mexican or indigenous personnel of that area. Aztecs, yes, the Aztecs would be, up that way.
And Mexico.
Branches, yeah. Mexico City was the capital of the Aztec Empire. Do you not know your history?
I know Mexico. But in California?
Yeah, man. Yeah.
Yeah, I said Mexico, then I said Canada, then I said California.
San Diego's right on the border, man. It's right on the border. So anyways, here we go. Let's get into it, guys. Rules. Brandon and I get together 5 to 10 minutes before the show, and we tell each other what we're going to talk about. You actually heard a live discussion here on the show. Today, we kind of sat in silence for 5 minutes as we were still wrapping up our reading and getting together articles. I want to start off with the win from last week. I love bragging about our wins. I also like talking about our losses and what we think happened. So I have a win and a loss. I have both from last week. So let's start with the win. Let's start off a positive note, shall we? Blink was one of my calls last week, and Blink is up. And so if you bought Blink at the time of the podcast last week and you still own it today, congratulations, you have made money. I would say go ahead and sell. You're over that 5% hurdle that I put for day trades or swing trades. I would say take your profit and be happy. But because I believe everything's going to come back down, have another drop, not a big drop, just a just say, hey, people are taking profits because they made some profits over the last few days. I think we're going to see some profit taking in Monday morning, unless unless big news happens over the weekend. That's typically what you'll see. Again, unless there's big news that happens over the weekend going into Monday morning. Brandon, looks like you have something you want to say on that.
No, not in particular on that. You're just talking about like wins and losses. And the only stock that I'm down on right now is RH. And I'm down pretty badly on it. But with that being said, I'm still holding on to it. This has been a weird recession because it's been, kind of backwards, where like the wealthy have actually taken a bigger hit than the Main Street people like us. So it's it's been a little bit backwards, and RH has taken a hit because of it, and they're still taking a hit because of it. The banking crisis and tech layoffs, all of that are affecting the the rich more than they are the middle class. And the result is that less people are shopping at RH because that's more of a luxury brand. But I think you could still buy it right now and still be getting a pretty good discount. I mean, it's down another 10% in the last month. But I don't see it going anywhere. I don't see them going out of business. I like the management. I think the CEO's got his good a finger on the pulse of the business cycle, which I think is great. So still hanging in there with it.
Gotcha. Copy that.
He's really negative on conference calls, like way too negative on conference calls. He will like depress you during conference calls in the past couple quarters. But I think it's because he knows what he's doing. He saw this recession or downturn for them coming, and he warned investors of it. And I have to appreciate that.
That is refreshing to hear, instead of like, hey, we had this challenge due to transitory inflation or the Ukraine war, or overstocked, and hey, we're going to come out of it. It's going to be a nice turnaround here. And it's refreshing to hear someone actually be honest about what they're going through and what they're dealing with. So there's that. There is that. I will talk about one of my losses real quick. One that I did for some reason. I don't understand what's going on with this company. But I do want to address it because I do like calling out my losses and publicly addressing it. Is Cooler. So last week we talked about all the big news between Tesla and the Cooler and what could possibly happen. This possibly happened, that possibly happened, what was going to happen. And I was like, man, this looks amazing. I don't know what's going on. But then as the market's selling off, it seems like Cooler's selling off as well. And they have low volume. So if they just get like, one whale or one big investor selling their shares and kind of moving out, then, that can have a huge effect on the price of the stock. And so it's really troubling for small time retail investors like, Joe on the street or the people who listen here that have reached out to me and said, what's going on with Cooler? I don't know what to tell you. I don't see any fundamental reason. Their gross, oh man, what is the word I'm looking for? Their gross profit between how much it costs to make the product and how much they sell it for. I can't think right now. That difference, right? That difference is at near, like it went up to 87%.
Okay.
So it's ridiculously high. Yeah. I mean, they make great profit on each product they sell. They just got to sell more. And that's the thing is that they just started selling. They're not moving it as fast as they would like, but they are still young and small. They're very small. They don't have a whole lot of employees. So they don't have the infrastructure put in place yet to pump things out at a large scale, which is what they really need. That's why I've always said, like, guys, this is a young company. It's a good company. They have a bright future. I think something's going to happen with Tesla, but I don't know what yet. And nothing's been announced. It's just me speculating.
And that gross profit, that tells me that there's a chance, at least there's a good chance, that they have room to lower prices if they need to in order to increase volume of sales.
Yeah, they could strike deals. They could say, look, if you're going to buy, 100,000 versus 10,000, we'll give you a deal, and they could cut into some of that profit. They have some wiggle room there, and that will help them get more deals going forward.
As long
It's
as long as like the rest of their overhead isn't too high.
well, they don't have hardly that many employees, and so I mean that's the biggest overhead for most companies is employees. Um, and so that's actually a plus for them. They are very nimble that way and adaptable, and they're able to move quickly and change quickly, which is good. That's a positive for now. But I mean, I would like to see more and more contracts signed than what they have been signed in. So maybe some investment in some sales executives would help for this company.
Yeah.
But that is one of my losses. I don't have a reason why it went down. I just don't. I looked. I looked at all the news. I looked at the fundamentals, guys. There's no reason why it should be going down other than the broader market's going down, and maybe some people are just taking their money out. They don't have a whole lot of volume. They have 400,000 shares being traded right now daily, so that's not a whole lot of volume at all. So I don't see a reason, but I'm hopeful on this company because I like where they're headed, and I believe that they're going to have some big deals going forward because a lot of big names in all sectors really know who they are. I think everybody's just kind of waiting to see if they could come out with even more amazing things for batteries. But yeah, that's what. Go ahead.
You know, I think that a lot of people probably looked at the Silicon Valley banking crisis, which was, you know, a bank that funded startups and newer companies and stuff like that most of the time, other than Roku and some other established ones. And they got a little worried that some of these other, you know, banks that other startups might be using might, you know, might fail as well. And they probably sold these startups in these smaller cap companies indiscriminately.
I mean, that could definitely be a good reason there. Why I don't know why I didn't think of that. Yeah, I mean, it could be a broader of small startups and small new companies taking a hit because people are concerned about the liquidity in the sector there, and are they going to be able to get the cash on hand they need in order to go year over year? Because typically, when you have a startup like a cooler, you're not going to break profit for 5 years. Is typically what you see, and they aren't publicly traded as quickly as Cooler was. That was very quick that they created a company and then went right to public. But yeah, you typically don't see profit for at least a 5 years time, and that's just because of the research, development, building out your infrastructure, building out distribution centers and production plants. It costs money. It takes time. It doesn't get done overnight, and I think there's a bright future there. But that's why I don't get too worried over the week over week because I'm not in it for the week over week with that company. So. Anyways, my recommendation if you're still holding it, just hold it. You don't need a DCA unless you have the extra cash that you want to invest in it. I don't see a need to. I say just hold it. It's going to go up. That's my view, and that's just my personal view on that. But all right, so I want to go into something here. I want to go into a couple different things. I want to venture into two different things, Brandon. So first thing is I want to venture in. Very briefly, I do not know a whole lot of detail about this, but I briefly looked into this Virgin Orbit thing that's been around the headlines, right? It's been everywhere. I was reading through two different companies. Fidelity Investment had an article on Virgin Orbit, and CNBC had an article on Virgin Orbit. So Virgin Orbit, if you guys don't know, it's a spinoff of Virgin Galactic. They are two separate companies. I want to first specify that Virgin Galactic is the one that Richard Branson created for space tourism, where you could get taken up there in a space flight and go orbital in it and really float around inside looks more like an actual plane than a rocket or a ship or something like that. And you could be up there for, again, it's like only a minute, a few seconds, but you could be up there and have that space tourism. That's Virgin Galactic. This is Virgin Orbit. They are all sister companies under the big umbrella of Virgin, but Virgin Orbit, it had a valuation back in 2021 of $4 billion.
Oh my gosh.
So that was its valuation. So here's how this all went down. So there was a a company that gave Virgin Orbit the valuation of $4 billion. So then based off of that valuation, they went ahead and gave him a loan for the company so they could go ahead and get some things rolling on. And how they were planning to pay for this, Brandon, you ready? They did this with a SPAC. See, I knew you would automatically just be like, this is why I hate SPACs, right?
Yep.
So the Virgin Orbit, they closed their SPAC deal and it raised near less than half of the 500 million that they were expected to do. So they raised less than half of that with that SPAC deal. So they did not get the money that they were expecting with the SPAC. Branson, he didn't want to fund the company anymore. He basically said, I'm not putting any more money into this. It's not going anywhere where he thought it was going to go. He actually started hedging against his equity stake through a series of debts. So he's basically, all right. So not only did they not raise the money they wanted to in the SPAC, they had this overblown valuation of the company. Branson didn't want to put any more cash into it of his own money. Instead, he took his stake, his 75% stake of this company that was valued at $4 billion, and took loans out against that in order to fund the company. So if you guys follow me how this math works on this company and how they're getting to where they got to, right? So it reached orbit. They did reach orbit. It was all privately funded. They had a launch vehicle. They had 6 missions since 2020. 4 of them were successes. 2 were failures. But then they dug into a $1 billion hole. They were just flying just twice a year while the payroll kept getting higher and higher and higher. As when you're building the company, you have to do that, right? So all this is the story behind it. But now after they saw this, they realized that they weren't going to make any money off of this. They realized they weren't getting the deals they needed in order to continue funding the business. Like, you have to be paid to send the satellites up by companies in order to continue funding your space exploration. But if you're not going up no more than twice a year and like 1/3 of your missions are unsuccessful, then no one's going to pay you $200 million to put their satellites up in the air for them. I mean, that's just not feasible. Looks like you have something to say, Brandon.
Back then in 2021, when they received that valuation, and this was so evident, we were in such a space industry bubble. Like, all you had to do was just create a company that made zero money whatsoever, and then put space in the name, and your stock would go crazy, because it was just such a speculative mania over space companies. And I had a good time day trading options on it, for a minute, but touching those companies to try to own them was just a fool's game. And I don't understand how people with all that money, how they didn't understand that, how they didn't get it. Like, this isn't going to last. Your valuations are stupid.
Yeah, I mean, the valuations were overblown. And you're right. Everybody was day trading. We were day trading some of these space stocks during that time. Virgin Galactic was going doubling and then falling back down, and then doubling and falling back down. That was a crazy time for Virgin Galactic at that moment. A lot of people, that was one of the Reddit stocks, and everybody was talking about how well they were going to do, So I mean, it was a crazy time for these space explorations. I will say that the stock, I'm trying to find it here so I don't misquote the price, but I believe that the price of the stock, it fell down to just, I think it was, there it is. The stock was trading around 20 cents on Friday, leaving it with a market valuation of $74 million, because all the news of everything of how they're just burning through money came to light, and how they launched fewer rockets with a workforce of 750 people than they did with less than 500 people.
That's still too high of a valuation.
And so basically Richard Branson came out and said, I'm just going to let this company disappear. And so that company will no longer be in existence, but the stock is still trading. and if you could do a put on it, I probably would at 20 cents a share.
Yeah, it's 20 cents, but like think of how many shares have to be out on the market. How many shares did they sell to people for a 20-cent stock to still be over $700 million in valuation?
Yeah, that's a lot of shares, and that's a lot of shares probably that are just sitting out there that nobody's buying. Nobody's buying it. It's just tanking. It just goes to show you that, guys, when a whole sector, a new sector comes along and it blows up, right? Like the space, like we're talking about the space exploration. Amazon, Bezos was doing amazing things. Tesla and Elon Musk was doing things with SpaceX. All these space exploration was blowing up, making headlines. People were talking about it all over. You got to think, okay, not every single one of these is going to be successful. One of these is yeah. Some of these are going to fail and disappear. So you have to be particular in what you invest in. You got to really look into the numbers. You got to really investigate this and see, is this really worthwhile? And one of the things to keep in mind is Blue Origins and SpaceX still haven't gone public, but yet Virgin went public almost immediately.
Yeah.
And that's another.
You don't look at that 20 cents a share and say that. You look at the $700 million, dollar valuation and say that's expensive.
Right. Exactly. So, I mean, that's what went wrong with Virgin Orbit. It was just bad news all around. Very not happy with it. I'm glad I don't own it, but I'm sorry if you do own it. That is sad for you.
Listen to our show enough to learn how to value stocks. There's a great article written by somebody over at chinchillapicking.com that can teach you how to do that. If you would have gone by those rules, you never would have invested in it.
Right. All right. So on to the next topic here. And this is the one we're probably going to spend the rest of the show on. And I want to talk about this. And Brandon, you and I, you read it after you made the comment and you said, I don't see any real big news in that. I said, you're missing something, man. And I said, I'll bring it up on the show. And then you caught it. And you said, okay, I see what you're talking about. And so I want to bring this up because I asked you, please don't steal my thunder. This is one I wanted to bring up. So the key, go ahead. You want to say something. I can see it on your lips.
Yeah, inflation's only going to rise a little bit from now. That's, we're already what? Like, how much has it risen? Like 12% or something like that since we've started, maybe even more. And now we're so excited that, like, not that it's going to reverse, but that it's only going to go up, a little less than.
Well, all right. So it's an inflation gauge. It's not even the actual inflation number, the CPI number. It's not even that. So this is the personal consumption expenditure price index, and it excludes food and energy. If you guys can follow.
Worst expenditures for people, food and energy.
Right?
Like your utility bills and what you're buying at the grocery store. That's what has been like the biggest killer of purchasing power.
Yes. So, all right. So when basically it increased 0.3% for the month. The Commerce Department reported on Friday. That was below the 0.4% that the Dow Jones was estimating and lower than the 0.5% January increase. So on a 12-month basis, core PCE increased 4.6%, a slight deceleration from the level in January. So another data from the report, personal income rose 0.3%, slightly above the estimate. So this is where you're getting your information from, Brandon, here. Consumer spending climbed 0.2% compared with a 0.3% estimate. These are all almost very in line with the estimates. There's such a small deviation one way or another here, and we're moving the markets over 1% based off of this information because personal income rose at the same rate that inflation went up. And this excludes food and energy.
You know why people are spending less on other things that aren't food? It's because they're paying $7 for a carton of eggs.
Yes. So yeah, I get where you're going with that, right? It's okay. Yes. Personal income went up very little, but it went up the same amount of inflation minus food and energy went up. And spending went down. So are people being smarter with their money? Are they finally listening to our show, Brandon, and being smarter with their money?
No,
Or they just have less of it now,
they have less of it. They can't
right?
spend it on those things because they're spending too much on food. Which I guess, like, if you're going to spend your money on something, it better be food. But
Right.
yeah, those eggs aren't like the $7 eggs. That's not grass fed, chicken. That's not like luxury eggs. It's just a $7 regular carton of eggs.
So there are those organic special grass fed or not grass fed, but like free range chicken eggs.
Yeah, they're probably $10 now.
I buy them and they are $8 a carton.
Okay.
I am that guy. It is me. I'm the problem. It's me, right?
Right.
So yeah, I'm the guy keeping them going. Come on, guys, let me hear it. So they're basically you go on and you read more about this, and it says that they're projecting traders are expecting cuts to this year, with end-year pricing for the federal funds rate at 4.2% to 4.5%. So now they're expecting that the Fed's going to come in lower than the 5% that the Fed was saying. So these are all people speculating. So early in the show, I talked about me speculating on cooler and what's going to happen with that. But here are lots of traders speculating that the Fed is now going to lower their goal on the rates down because of some good numbers coming in now. I personally don't see the Fed lowering it below 5% right now based off these numbers. Now, if we get different numbers going forward, maybe, but right now, based off what I'm seeing here, I think the Fed's going to stick with their 5% goal, and that's the number they're going to hit. Brandon, thoughts on that?
Yeah, I think Powell sees himself as our generation's Paul Volcker, and if that's the case, no, he's not going to lower interest rates at this point in time. We'll probably go into 2024 before they lower interest rates, but unless there's a steep Recession. Previous Federal Reserve chair people like Janet Yellen, they might be lowering right now. I'll be honest with you, it'd be the most politically popular thing to do. That would make the president and the administration so happy. And I'm not picking on Biden when I say that. It would be any president that would want them to lower interest rates, because politicians are they're short term oriented. They want everything to be great now. It doesn't really matter what happens in 4 or 5 years because they'll be out of office. But so it would be like, it'd probably be the easiest road for him to go down politically, where he would face the least amount of backlash for right now.
Yeah, from politicians, but not from investors, traders, economists, people who understand the economy and how it works. They'll be all over it, like Bloomberg, CNBC, blowing it up, saying, "What are you doing? You can't lower rates now."
But smart people would be, but people who let's be honest, there's a lot of people who want the increase in the stocks right now that would absolutely love it. If they came out and lowered interest rates on Monday, the stock market would go insane for the short term.
It would go insane for the short term, but inflation would also go high.
Oh yeah, and it wouldn't be good.
We would never tame inflation. We would never. And the way inflation's going, people's pay is not keeping up. People are going to get poorer and poorer and poorer each and every year that it stays this high.
Yeah, Dave, what's the matter? You don't want to die? You don't want to drive $100,000 Ford Pinto?
No, I don't. I want my Ford pickup to stay at the prices at now, and my pay go higher.
Yeah,
is what I want, and that's what everybody else should want. Is that their pay goes higher than the rate of inflation? That way, over time, they make more and more and more and more money. That's the goal. When we have the way we have it now, people are getting poorer. The last 2 years, the average American has become poorer. And it's not helping any situation whatsoever. And unless you have other avenues of income, Brandon, like you and I have, unless you have that going on, your situation just has gotten worse for the past 2 years. And I'm not going to say anything against the whatever administration's in office at this time. This happened because of other things, like we explained on last week's show, how it came into existence. It was over a period of time of moves made at different times that were bad. rippled into where we're at now.
Yeah.
And so it's just taken effect over the last 2 years, and it's really hurting people. And we need to do something about it. And we have to, and I believe the Fed's going to stick with what they have, and they're going to stick with their goal of 5%. Again, this is unless I see other numbers that are would change my mind. I think Powell's going to stick with what he's doing unless he sees other numbers that are going to change his mind. Because these numbers today, they're so flatlined based on the estimate. It's so close. It's nothing to get excited over. It's really not. Yeah, I mean, is it a good sign that we might be moving into a better direction faster? Yes, but that spending's coming down, meaning economy may start slowing down again. You know, I mean, you and I talked about whether or not we were in a recession last year. We both said we were because we had 2 quarters of negative GDP growth. That was our definition. And are we going to see another recession this year?
It's been the definition for ages. It's just that when it happened and it became politically inappropriate to say it, people wanted to change it.
Well, this is not a political show. This is a financial investment show. Exactly. So right now, I think we're going to see the economy slow, which is what we need to happen so that we can get a hold of inflation, so that we can actually come out here and start seeing real growth and have our investments, our long-term investments, start showing real returns on our money. How I would play this, guys, is if you're day trading, you got to look at the macro headlines of the day. You got to wake up in the morning. This is what I do. And one of the first things I do is I look through all the headlines and I see what's happening on in the world, what's going on. I go through all my news sites. I go through multiple ones, not just ones that I like. You got to go through them all because you got to get the headline from every single angle. And then you go through the stock business news and you read those headlines. And if you see headlines that catch your eye, you read the articles. So I read a lot of headlines, but I don't always read the articles.
Yeah.
So someone will tell me, hey, did you hear about this? I'm like, I saw that headline, but I didn't read the article. So sometimes, and that's what I do to start my day. That way I know what's going on. So now when I go through my watch list, I'm like, okay, XYZ happened over here. That means my company ABC should be moving down or should be moving up on my watch list. And if I go in there and I see it moving down, boom, I already know. Maybe do I want to sell some more of it? Do I want to do a put? Or is this one that, hey, it's going down, but I think this is just a short-term event. I should buy it now because it's going to jump back up. And that, Brandon, is how I do some of my day trading by doing things like that. And so right now with this good news coming out, like I said, come Monday, we should see profit taken. Unless there's other macro event news that happens between here and Monday. If it's just more of the same from here to Monday, I think you're going to see profit taken come Monday morning and the market's going to drop right away.
Yeah.
Now, will it stay down all day Monday? Maybe not. Maybe people are going to like, hey, I took my profit. Boom. XYZ company's down 5%. Let me buy back in. And then they make more money. And that's how day trading works if you're smart about it, but you have to be very careful.
Yeah.
But,
so they
go ahead.
They took the biggest expenditures, the things that have been hurting consumers the worst, the increase in the price of food, the increase in the price of energy, and they took those out and they said, oh, great, people are spending less on everything else. And, you know, instead of saying, well, maybe it's because they're spending more on food and energy that they're spending less on everything else, right? So it's really goofy to take it out. I know it's the Fed's preferred gauge. I think right now that's the wrong way to look at inflation. And, you know, just to like stay apolitical here. If you've got things that you want the government to spend money on, the way for it to not be inflationary would be to raise taxes, because if you're paying for it with taxes, it's not inflationary. Other than that, without raising taxes, to increase government spending while the Federal Reserve is trying to do its job, you basically have a tug of rope going on. Like the Federal Reserve is not going to be able to do its job of lowering inflation as long as we're continuing to increase government spending that we're not paying for with taxes. Because if you're not paying for it with taxes, you're going to pay for it with inflation, because what has to happen is Joe Biden or whoever it is has to get on the phone with the Treasury and say, hey, how about another roll of those Benjis? Give me some more Benjamins to put in the economy. And what's that do? That values the dollar and increases prices, right? So
another roll of those Benjis. It does devalue the dollar. Yes.
Yeah,
Yes.
so I mean, we're not going to go anywhere with inflation. We're not going to decrease the inflation that we've seen over the past couple of years, as long as we're continuously increasing government spending for programs that we're not paying for with taxes. And I'm not advocating higher taxes. I'm not advocating for, lower taxes or anything like that. I'm just stating a fact about how inflation works when it comes to government spending. And we're seeing inflation right now because of the government spending post COVID, just like we saw it in the 70s with post World War II government spending.
And I'm going to wait and hold off until I see the CPI report, and I want to see that drop below 6%. I want to see core inflation drop below 6%, because that's the one that's really we've been tracking from day one. And if we could get down to the 5s, the 4s, and then maybe down to 2 by the end of the year, that would be excellent.
Yeah. And I know post World War II, I said post World War II. I know it was 30 years into the mid 1970s, but it was a buildup of government spending and increased spending without taxing that led to that inflation as well.
Yep. So talking about devaluing the dollar, this is the last topic I want to get into. Spend a few minutes on this. I asked you before the show started about your thoughts on gold. So what's your thoughts on gold now that you went on a rant there about inflation and devaluing of the dollar?
It's gone up quite a bit the past 5 years. I'm not neither here or there on it, just because of how far it's gone up. I think if you wouldn't hedge, gold's a fine bet. I would leave that more to you, Dave. I think you know a little bit more about about gold and stuff like that than I do at this point in time. I would say, however, if we see a banking collapse or anything like that, then or inflation proves that it's not going to be stopped by just Federal Reserve, increasing interest rates without doing anything about government spending, then gold's probably a good investment.
So you're saying gold is a good investment, right?
Yeah, well, yeah, I err on the side of good here.
Err on the side of good, he says, guys. Err on the side of good, he says. All right. So here's one of the reasons why I'm bringing this up here, and I'm trying to find. See, as we do the show, guys, just so if you're listening, we tend to go back and forth between different things we have saved on our computers so that we can quote things correctly. Because when we're quoting things, we want to make sure that I've mentioned the right thing at the right time and I didn't misrepresent anything, and so on and so forth here, right? So as I'm talking here, I'm trying to find the one article I saved, and I guarantee you it's just timed out on me, and I bet you it has. Oh, it did time out on me. Anyways, I remember it, so we're gonna go off my memory here, guys. Pray I remembered it correctly. So Barrick Gold is a company out there, and what I'm talking about is unusual option activity on Barrick Gold. So the Barrick Gold puts. There was one person out there who did puts on Barrick Gold for multiple different strikes. I mean, but they did it with over $200,000 for premiums on Barrick Gold. And right now, Barrick Gold is trading at $18.58, and they're saying that it's going to drop down to $13. And $200,000 on premiums of it dropping down to $13. If they are correct, this person just made millions on this bet. But they are basically saying that the dollar is going to be devalued, much like you. And thus, well, actually, no. And I got that wrong, don't I?
What?
I was going to say the dollar is going to be devalued, so the value of the stock would go down. But
no, the value of it would go up with the dollar.
Yeah, the value of it would go. So they're hoping that the dollar doesn't devalue, that the dollar increases in value.
So
and that's what they're betting on.
Historically, with the Federal Reserve raising interest rates, that's what should happen. But you have to have the federal government and the Treasury and the Federal Reserve working all hand in hand on this. And I don't think they are.
But if they are, this person made the right play, because interest rates are going to go higher, and the dollar is going to stabilize and strengthen, and thus gold prices will drop. and the buried gold price of stock will drop down, and this person will make a ton of money. So
Right. So I erred on the side of good for gold as an investment, but I'm not buying it myself just because with the increased interest rates historically what happens, the price of gold goes down. But I don't you've bought gold before, Dave. You actually have physical gold, don't you? Like or
I
something.
do, I do, I do.
One of them.
I
So
have both.
if you buy it at market value, then can you still sell it somewhere at market value without like going to a jeweler or something like that or a pawn shop and paying for this, getting it at a discount?
So yes, yes and no. The answer to that is yes, you can sell it at market value, but you always have to pay someone a commission for selling it because you're never the one who's selling it. Either
Okay, that's better though.
you could sell it on eBay at market value and get your money that way. Otherwise, you have to sell it to an exchange, and there's lots of exchanges out there. The biggest one and the most secure one is APMEX.
Really?
APMEX. That's the most secure one out there, and that would be one exchange you could go through. They sell all kinds of precious metals and coins and rare coins and all kinds of coins. I've bought some stuff from them that was really cool, like little silver things that I found interesting and cool, not for like investment purposes, but because I just like them. But yeah, the APMEX is one that's out there that you could go through, but you paid them a fee for handling it for you.
That's
eBay would be
fine.
another way you could do it.
As long as it's a low fee and it's not, super expensive or anything like that, like maybe 7 to 10%.
Yeah, I mean, people will buy rolls of gold coins, like $20,000-$30,000 worth of gold coins at a time, off and on from APMEX.
But then you just told them, so like it's not a trade, right? Especially if you're paying 7 to 10% or something like that in commissions for selling it, then you probably want to hold on to it maybe for decades.
Yeah, for a while. I don't plan on ever getting rid of any of my precious metal investments. Those would be passed on.
And that's another
my
reason
goal.
why I would say err on the side of good for gold investment, because I mean, just historically over the past 100 years, if you're holding on to it for a long time, it's always been a good investment.
Yeah, but I mean, right now, what this and I bring this up again, I divert back to this. He's this person. I say he, but this person believes that the gold companies are going to go down and making big, huge investments in playing options on this.
Yeah,
and options are always risky. So if Barry Gold doesn't drop down to around 13 or at least close to it, this person's going to lose a lot of money.
Yeah,
especially if it goes higher.
And I say always been a good investment, other than the times that the federal government made it illegal to own physical gold.
Yeah,
not so much, but
I tell you what, we'll end on this quick story. I'll tell you this. I'll share this story with you guys. So back in the day, you could buy gold and you wouldn't have to pay shipping, right? And from the U.S. Mint, gold coins or just coins, right? But mainly gold coins. And you could buy it from the U.S. Mint, and they would ship you all these dollar coins. Like you just buy $1,000 worth of dollar coins. You take it, then you go to your bank, and once you get those coins in, you could take them to your bank and deposit in your account, right?
Mm-hmm.
People were doing this with credit cards back in the day, and they would buy the coins from the U.S. government or the money. They're not paying any shipping or anything. So like they'll buy $1,000 worth, take it to their bank, deposit the $1,000, pay off their credit card, and they would do this, and they would rack up credit card points. Lots and lots of reward points over and over and over and over again. And after a couple of years, they caught on to what they were doing. So now when you go to usmint.gov, you got to pay shipping and tax and all these fees because of people who took advantage of the system. And that's why we pay extra money, because people take advantage of loopholes all the time.
All right.
That's true story. Look it up. True story. Shared it with you. But lucky for those people, they got a lot of credit card points there for basically free. Just time. They were waiting for it all to come in the mail. All right. Final thoughts, Brandon.
Yeah, buy Activision. It just got the deal, the Microsoft deal with Activision just got approved in the EU. The stock rose about 10% off that news. You still got another 10% to the $95 buyout price Microsoft's offering. It got approved in the EU, which is stricter than the United States. It's going to be approved here. There is no argument that Microsoft's going to be a monopoly because of this. The argument that Sony has made has been that, oh, they'll take Call of Duty, they'll make it exclusive to Xbox, which, by the way, they're just arguing that, Xbox is going to do the same thing that they've done for, 25 years or however long it's been since the first PlayStation was intact. And, Resident Evil for like 10 years was PlayStation only. Grand Theft Auto, when it first came out, was PlayStation only. Ghost of Tsushima, PlayStation only. I mean, this is something that these companies do on a constant basis. Sony does it all the time, makes things exclusive so that you have to have Sony, the PlayStation, to play Ghost of Tsushima, for example. Microsoft promised that they're going to make Call of Duty cross-platform, which is fine, but even if they didn't, they're still not a monopoly. There's no argument there. So I think that this gets settled. We got another 10% to go. I say buy Activision.
I'm not listening to Brandon on this because a year ago he convinced me to buy Activision, and I sat on it for 6 months, and we eked out like a 2% profit. So I'm bitter. I am very bitter about this.
You're buying some. Now I'm up to like 11% on it right now, and for 6-7 months, that's not that much of a gain. But when you look at it in comparison to other equities and stuff like that, really, that's pretty good. Especially, for the past 12 months. But with that being said, when you go into something, what you have to do is you have to balance the risk and reward, right? So yeah, the reward may come at a longer point, but the risk, in my opinion, is very low. So even if you were to say like buy Activision now, right, with 10% left to go, or buy Google, yeah, you might get 20 to 30% on Google, but there might also be a market correction or overreaction that happens that brings Google down 10 to 15%. You don't know. But that Microsoft buyout price at $95 is going to keep Activision stable until it goes up to $95.
I got you. And I agree the risk is low, but I mean, it takes too long I'm impatient. I did not buy it for an investment. I bought it for a trade, and it took too long for me to make a profit. So that's why I'm bitter. Anyways, yes. For me, I don't really have any calls this week, guys. I'm going to stay in my investments. I'm going to sit back and watch. I'm looking for the market to take a turn down early Monday morning, unless there's something that happens that I don't foresee right now. But keep an eye on Bitcoin as it continues to move higher. Riot's going to move higher with it, and with that provide some opportunities. But if Bitcoin starts going down over the weekend, Riot's going to drop, and that might offer a buying opportunity for Riot blockchain. So that's something to add to your watch list. I'm not saying buy it, and I'm not saying trade it. I'm saying add to your watch list and keep an eye on it. That's all I'm saying. So as always, guys, we hope we've been entertaining, educational, and uplifting, because we want everyone to make money. Have a good night.
Have a good night.